Okay guys, so I just managed to pass another phase 1 100k funded account, and in today's video I'm going to be breaking down the full euro dollar trade that I took in order to pass this account, as well as the full risk management plan which I use, which is a completely mechanical management technique that I use on all of these funded accounts. And I'm going to be explaining the difference between how I managed the accounts phase 1, phase 2, and the live accounts as well. I'm going to be walking through my full trading plan, the full technical strategy, so you guys can see exactly how I trade and pass these funded accounts consistently. Now, before we get into the actual trade breakdown, I just wanted to mention that all of these trades that I've taken on my funded accounts are called as pending limit orders inside the community, as well as in our daily live morning calls as well. There's none of this TP1, TP2, TP3 nonsense. I tell members exactly when I enter, exactly when I exit, and as I said, they're pending limit orders, so members always get the same entries as me. So if members would have taken all of these trades that I sent into the group, they would have passed their funded accounts as well, because their results basically match mine because they're pending limit orders and I only have one take profit per trade. Alright guys, so now that you've seen some proof that we took this trade and passed the account, let's break down this first euro dollar trade, which is the trade that I took this morning on the 19th of November to pass this account. So as always, with all of my trades, this originated on higher time frame and I worked my way down to the lower time frames to execute the position. So what I've been saying to the community over the past couple of, probably since around the beginning of October now, so the past month or so, is that higher time frame on euro dollar and any of the USD pairs really has been a little bit more ambiguous. And what I was essentially seeing here on euro dollar was that the overall bullish narrative was still intact, right? We still had price respecting this daily bullish structure, because this was, if we mark this on, price had come down, respected demand, we had that bullish breaker structure to the upside. So technically, and viewing this simply and just mechanically from a technical viewpoint, this was our most recent bullish breaker structure, meaning that the higher time frame was still bullish until price breaks this low down here. Recently, we saw price come down, trade down into this imbalance, and sweep this last bit of liquidity here. Tip for you guys as well, and one thing I always mention to the guys, is that you want to pay attention to the last bits of liquidity whenever you have an imbalance like this, because once price takes out that last bit of liquidity into the imbalance, it's, especially if this is on the higher time frame, it's very frequently going to react to that, as you saw here. So last week and the week before, we were looking to capitalize on buys based on the reaction from this level after we saw price had flipped bullish on lower time frame. But this week, we saw something interesting, and this is why I say the higher time frame on euro dollar at this point in time was slightly more ambiguous or uncertain, is because recently, if we're following this kind of internal bearish trend, you can see that price was still respecting this bearish structure. So we had this bearish breaker structure, price pulls back, holds supply, which is that indication that it doesn't want to head higher and wants to head lower from this point. We then had another breaker structure a few weeks ago right here. And then even though we were looking to buy after price swept this liquidity, this week I was predominantly bearish on euro dollar, and the reasoning for that was because price had come up the week before and had started to react and respect this area of daily supply. So I'm thinking that if price is going to, because it is still respecting this bearish structure, if it is going to continue lower, it's probably going to do so from this area of supply. If it came any higher than that, then yeah, we were probably wrong about the sells, and price was probably going to be longer term bullish, because if it breaks this supply, there's nothing really else for it to react from until it, for example, seeks this next drawn liquidity up here. Significantly as well, just notice here how it's reacting after it swept this daily liquidity right here, which if we jump over to the 4-hour chart, is the top of this 4-hour supply zone. So again, another tip for you guys, and one that I frequently use, is when looking at areas of supply and demand on higher time frame, sometimes price isn't going to respect the supply or demand itself. What it's going to do instead, a lot of the times, is sweep the top of that supply or demand, and then once it does that, because the liquidity from that area has now been taken out, price then gives that reaction to the downside, as you can see it did in this particular case as well. Now again, 4-hour, strictly speaking, was also a little bit more ambiguous going into this week, because if we're looking at this kind of internal bullish trend, it was still intact because we had this bullish breaker structure. So technically speaking, this wasn't technically bearish until price broke this low, which is that current higher low. But what I was looking at here was the fact that price had pulled back into that daily supply. We had had this liquidity taken out. And if we look on the hourly chart, let's just rewind to the beginning of the day. So at the end of last week, we had price first indicate to us that it perhaps wanted to shift longer term bearish once this low was broken. Because on the hourly chart, this was the current higher low, which price you can see very clearly broke. And then all throughout this week up until this point, which is Wednesday, we've had this kind of bearish structure and order flow being respected. As you can see, price just creating lower lows and lower highs. And then what I saw going into today was, if we just mark on the current lower time frame structure, was the fact that we had, after price grabbed this low, this high yesterday. I was looking to sell from this yesterday, but there was no entry model met, so unfortunately didn't manage to get in on that position. But we had price create this new low, so technically this is our most recent breaker structure, right? Now going into today, we just play price on a few candles. This is where London opened at this candle right here. And you can see that at London open, if we're not looking at anything else here, you can just see by how the kind of nature of this pullback, right? It's very slow, corrective. We've left these equal lows below, and we had price tap into an hourly supply zone. And this hourly supply zone as well swept that high to the left from yesterday. So it was a very clean area of supply. You can see it created some clear imbalance. We also had some previous highs swept into this level, including the Asia high as well. So that's a nice extra confluence. It's not something I always wait to be taken out. I don't always wait for Asia high and low to be taken, but in this case, you had that as like a nice extra confluence. And also, think about what the textbook mindset would be here once people see this, right? It just looks like a breaker structure. So the textbook mindset here would probably be, look for a retracement to buy because this is a bullish breaker structure. But because we are aware of that overall bearish narrative on higher time frame and the fact that price was likely going to seek the next draw on liquidity at these lows, and the fact that, like I said, this pullback was very corrective in nature, meaning that price was kind of just ranging below this supply. It didn't really have any intent to the upside. I was looking for the shorts. Now, once price tapped into this area of supply, if we just play price on a little bit, you can see we had this very aggressive push up. But once price took this inducement below that area of supply, notice the impulsive move we get to the downside, right? When looking for entries, this is kind of perfect because we want to observe intent and momentum like this. We don't want to just see price, slowly moving down like this, because then it could just be a liquidity grab for price to head higher. We want to see this kind of very intentional and impulsive move. Now, with my entry model, I have a very simple entry model. On the M5 time frame, I look for a change of character plus imbalance. That's the only two things I need to see. So we've had price very clearly here create that change of character to the downside. For anybody unfamiliar with this term, it's essentially when price creates a lower low in an uptrend. So it's an indication of a trend reversal when price is creating higher highs, higher lows. If it then creates a lower low, that bullish structure has kind of ended and we're expecting price to reverse. Now, in terms of where I actually set my entry on this one, because we did have quite a big imbalance, what I was seeing here, I don't usually use the 15 minute, but in this case, it was a lot clearer than the M5. You can see we had this kind of whole area of supply right here. Typically, what I will do is I will only use the M5 and I will look for a point of interest to enter on the M5. But in this particular case, because the 15-minute structure was the same and it was just a little bit clearer to see, I set my limit on this area of supply right here with a 10 pip stop just above the high. As you guys can see, let's go back to the group. This was the trade, so 15876 and 978. So the entry was a little bit lower, 76, and this was 978. So this was the trade. And typically what I do with my take profits is I have a mechanical 1 to 3 take profit rule. So on all challenges and live funded accounts, I have this rule where I will do a mechanical 1 to 3. I don't make my trades break even. I don't take partials. I just hold to stop loss or take profit. The reasoning behind this, by the way, it's not just random. It's based on data. So over several years of live testing and back testing data that I've collected, the most profitable approach I've personally found is to actually hold to a 1 to 3 without making the trades break even. Break even, even though you kind of have this illusion that you're being more conservative and managing your risk more effectively, it actually led to less profit in the long run. So technically making break even using the system was more risky because it led to less profit. Now, with this trade, this was slightly different because I only needed 2% or just under 2% to pass the phase one. So on this one, I was targeting around 1.9 R because that's all I needed to pass. Now, in terms of the risk management aspect of things, I do 2% risk of my account on phase one, 1% risk of my account phase two, and 1% risk on the live funded accounts as well. The reason why I do 2% risk on phase one is because I don't care if some of the challenges lose, as long as my payouts cover the lost challenge fees. So with this account, for example, I only paid £200 for the 100k account, meaning that if I get a 1% payout or on this account, then I've made around, after the profit split, 4 times my investment, and I get that initial investment back because it's refundable. So the risk to reward is definitely worth it. And based on that risk to reward ratio, it means I can basically fail around 5 challenges in a row and only break even if I get a 1% payout, right? So I don't really care if some of the phase ones lose. That's why I'm doing a higher risk. Obviously, if that's a lot of money to you and you do care about the phase one losing, I would recommend cutting the risk and doing 1% per trade or using a smaller funded account. But I was happy to lose these, so that's kind of my management process. And like I said, with all of the phases, live, phase one, phase two, I just do this mechanical 1 to 3 take profit. And as you guys can see, this trade was very nice, to be honest. It tapped us in, didn't go into really any drawdown whatsoever, and then just sold off and hit TP. Now, throughout the rest of the day, we can expect price probably to head towards this drawn liquidity. And as I said, usually I would hold to a 1 to 3 without making break even or anything like that. But on this trade, I only needed 2% to pass, hence why I cut the trade early and exited here. Now guys, before you click off this video, I want to make sure you get as much value as possible from it. So I'm going to be breaking down a second trade example using the same mechanical framework as I just went through, because in truth, any trader can learn the technical strategy. It's not that difficult. You just learn the set of rules and apply it to the chart. The hard part and why most people mess up is the actual application side of the strategy, because most people can't execute the strategy live and they can't identify the setups in the live market. Now, the only way to get better at this is to see as many trades as possible and to spend as much time on the charts as possible. So hang around for the next part of this video and we'll break down a second trade example. Okay guys, so second trade breakdown. This is one where the reasoning behind this trade was essentially, at the time, I was in a GBP USD buy trade, and obviously both of Eurodollar and GBP USD are positively correlated. So if you expect pound US dollar to go up, Eurodollar is also likely to go up. So I was already in a GBP USD trade. So this one was one I forecasted but didn't end up taking as per my rules, because I can only enter one trade at any given time, particularly when they're correlated like this. Because if you were in both, obviously if one loses, the other one is also almost definitely going to lose, so there's no point entering both. But it was a perfect example of the strategy regardless, so let's go and break this down. Now, in terms of higher time frame narrative, this is the same as before as in the first trade, where price was technically still in this overall bullish trend, right? We had this bullish breaker structure right here. Price had pulled back, respected this area of demand, and then had broken structure on daily time frame. Now, what I was mainly looking at here, which is what made me look for this trade in the first place, was the fact that price had traded all the way down into this imbalance and had taken out that last bit of liquidity before this imbalance. I mentioned this in the first trade, but a major tip is to pay attention to the last bit of liquidity whenever you have this kind of formation here where you have that imbalance. So last bit of liquidity before the imbalance. You will typically see price react to this, and it happens all the time. So for example, back here, you have this last low before the imbalance. That's where price reacts to, and it happens all the time, particularly on higher time frame. Now, one of the things that I always stress to the guys inside the community is that as traders, we don't want to predict the market, because we are not, forecasters. We are traders at the end of the day. So instead of predicting the market, we want to react to what price shows us. So if, for example, price swept this level and just indicated that it wanted to go lower, I was happy to take more sells. But in this particular case, if we jump over to the 1 hour, we can see that once that level was taken, and this is what I mean by reacting to the market, we can see price shift back bullish as indicated by this bullish change of character. And notice the intent coming in here as well. We had this very kind of impulsive move. Looking to the left, price isn't really reacting to anything either. Now, if we jump over to some of the lower time frames, the structure that I was looking to follow at the time. So the day before, we had kind of this very slow and choppy day with price just moving very slowly up. But marking on the 15-minute structure, this is our most recent breaker structure. And you can see that price was kind of overall respecting the bullish narrative. Demand was being respected and all of the highs were being broken. So we had buyers being in control and that very clear bullish narrative. Now, one thing I mentioned in the first trade, which I want to draw your attention to again, is just looking at the nature of pullbacks. So this pullback in particular, you can see, was very kind of slow and corrective. Very efficient price action, doesn't really have any intent to the downside, and we had left these kind of equal highs above. Most of the time when you see a reversal, price is going to be much more intentional and impulsive than this. When you see very corrective looking price action like this, most of the time the purpose of it is to engineer liquidity for price to later go higher and thus continue to the upside. Now, in terms of an actual point of interest for this trade, this one was a little bit more discretionary, but I was looking at this hourly wick right here. You can see that that's kind of a key liquidity level within that current bullish leg. So once price took this out, and also we also had the added confluence that Asia low was taken out at the London Open. Once this was taken out, you can see very clear momentum coming in. The main thing I was looking at here in terms of actual entries was the fact that we had all of that volume coming in. And also, as always, M5 confirmation for the entries. We had this M5 change of character. Now for my entries, like I said, very simple entry model. All I need to see is two things, M5 change of character plus imbalance. Here we had both of those, change of character, and we had imbalance. Now on this one, I would have wanted to wait for a pullback into the demand itself, because if we enter all the way up here, the risk reward is not going to be worth it. So entry would have been on the demand itself. And as with all of my trades, mechanical 1 to 3 take profit, which aligns quite nicely with this drawn liquidity above these kind of equal highs. Phase 1 accounts, 2% risk for this trade. Phase 2 accounts, 1% risk, and also live funded account, 1% risk, with mechanical 1 to 3 take profit. And as I said, I do not make these trades break even, and I do not take partials, because holding to stop loss or take profit was the most profitable approach over, several years worth of data. So yeah, that's essentially the breakdown of that second trade. A very simple mechanical framework. Like I said, just using simple market structure, point of interest, plus our entry confirmation on the M5 time frame. This is the simple 5-step framework that I use every single day live with the community in our daily live morning calls, and the same system which allowed me to go full-time trading 2 years ago, and the same system I've used for over 3 years now. Now, if you guys want to partake in these daily live morning calls, or just simply copy my trades as pending limit orders, then I will leave a link to the group in the description below. Now, with that being said, I hope you found some value in this video, guys, and I will catch you all in the next one.